Good afternoon, everyone. I hope everyone is okay. Straight to the point. Today we have CPI on the dollar, meaning this is now we are looking at the US. We have CPI in the US dollar today at 3:30 Ugandan time. So you can always convert your time and know what time, but over here it's just like 2 hours, less than 2 hours to CPI. So let me explain what is CPI. CPI means Consumer Price Index. This means this is the change in the prices of goods and services, mostly essential products. Things like grocery, things like electricity, things like petrol, really things people need to use every single day at home. So once the number, let's say, okay, let me give you an example. Once the price of bread has increased this month compared to the previous month, what does it mean? It means there is a higher number, like the CPI number has increased, meaning the prices of goods and services, essential goods and services, has increased. What does it mean? It means once the prices of goods and services have increased, most of the essentials, it means people are going to spend more money to actually to feed their homes, to go to work, to travel and all do those things, to maintain their homes, because like electricity for heating. We're looking at the US where they have winter. So you find that once this number has increased, it means people are spending more money. Once people are spending more money, what does it mean? It creates inflation. Once it creates inflation, what does the central bank see? The central bank sees, oh, there's high inflation. So how do they deal with high inflation? They deal with high inflation by increasing interest rates. Once they increase the interest rates, what does it mean? It attracts people outside the US, even in the US, to invest money into the bond market. This gives the US dollar strength, but it makes the stocks, the indices, mostly like NASDAQ US 30, S&P 500, they all dump down. Why do they dump? Because the cost of borrowing is going to be crazy. The interest rates have been increased, meaning once they borrow, they have to pay high percentage in the money they have borrowed. So those companies tend to drop, the value tends to drop, but the dollar gets strong. So it means if this number comes out higher than forecast, which is forecast is 0.3%. If it comes above that, you're going to expect to see let's start with gold selling, Euro USD selling, GBP USD selling, USD JPY buying. So we are looking at a strong dollar. But you're going to see all the stocks dumping. You're going to see the NASDAQs, also stock indices, NASDAQ selling. You're going to see the US 30 selling. You're going to see the S&P 500 selling. But if the opposite comes out, if the number comes out to lower, it means if bread was being bought at $2, it means now it is maybe at 1.5, meaning people are going to spend less money on goods and services. Once people are spending less money on goods and services, it is less inflation. So there is less inflation. What does it send to the central bank? Oh, the inflation is being handled well. There is less inflation. So the central bank has a signal of reducing the interest rates. That intention of that message sent to the central bank weakens the dollar. Why? Because low interest rates don't attract people to invest in the bond market. Remember, bond market strengthens the dollar. So once people pull out money and then they go to invest in other currencies that are giving the opposite, that are giving high returns, the dollar gets weak. Once the dollar gets weak, you are going to see, if this data comes out lower than the forecast, you are going to see GBP USD buying. You are going to see Euro USD buying. You are going to see gold buying. But now let's look at the stocks. What are they going to do? You are going to see stock indices. They are going to be buying. Why? Once the interest rates are going to, once the central bank gets that message that the interest rates to be reduced, what happens? It means the cost of borrowing is cheaper because the interest rates are down. What does it mean? It means these companies can borrow and expand and run their activities. So you're going to see stocks pushing up. You're going to see stock indices. We talk of NASDAQ US 30, S&P 500, and many, many more. They're going to be buying. So this is what you expect. So we wait for the data to come out and then we take a trade. There is nothing like panicking, taking a trade before. No, you wait, the data comes out. Once it comes out and you find that this has happened, you position yourself to take a trade, already having the data on your table. So that's what I wanted to share for now. If you have any question, use the comment section, ask anything. I'll be able to respond. So let's wait for CPI. Then not forgetting. You see, once this CPI comes out, what determines the trend of the market after that? It is this CPI for a year. You see, they are different. There is core CPI MM. It means the data we are going to receive today, it is the data of last month. So we are receiving the data of last month. The previous, that is the data of the other month. Then, when it comes to CPI for a year, now, very funny or very tricky. Here it is a year, meaning they are looking at the previously, it was 3.8%. That means that was the CPI data of May 2025. So what is coming out is going to be the CPI of May, which is the last month of this year. So if this data comes out higher than the forecast 4.2, it means generally you're going to see a trend that those trends can exist even for 3 days, even a week. You're going to see a trend, market moving in a direction. If the data comes out high, you're going to see generally the market selling. We are talking about gold, we are talking about GBP USD, we are talking about Euro USD. You're going to see it generally setting a trend of selling, meaning that is the general direction. But if it comes out lower, it means you're going to see, in general, you're going to see a trend. So this CPI for year, that is the one that gives us the direction bias. The one for a month gives us the noise. People see the noise, the candle pushes up in seconds. That is where the noise is. But where the market is going to go is determined by CPI for a year. So if you liked this, just you don't even need to ask anything. If you don't have a question, you can drop an appreciation, how you find this video. If you have a question, you can drop, you can comment, like, and subscribe. Thank you.